RIN TV cameras caught up with several industry leaders at the recent Joint Industry Forum in New York. Through a special arrangement with ACORD, we now bring you a glimpse of what went on behind closed doors. Here we have highlights of a panel of experts providing a view from the outside looking in.
We weren't overly concerned about whether TRIA was there in place because the risk and the management of the risk and the exposure that the companies had, the larger risks were with the larger companies. And companies had done a good job in terms of just the overall diversification of their risk and what the exposure was. I think it was more, it's more of an issue of what it does for the economy and the coverage that might, the additional coverage that might need to be placed that insurers wouldn't have provided had TRIA not been there.
I think the problem, I know that there's a sense of some in Congress that a private sector solution could work here. And I think if you're dealing with, if there's such a thing as plain vanilla terrorist risks, then perhaps, yes, there might be an appetite for that. But I think that when you look at the concentrations of exposures and the intent of maximum disruption and economic loss, and you consider the interdependence of the exposures and the risks, that particularly as it applies to the NBCR, the nuclear, biological, chemical, and radioactive, I don't think there would be a market for it.
Other countries, as you have pointed out, there is a public-private partnership that has gone over the years, and I think we're at that point here in the U.S. to try to recognize that the industry has taken the burden of this, except for the very large losses, and if they don't have that protection, they will be very concerned, rightly so, in terms of being able to sort of deal with an extraordinarily large loss.
To me, as a coverage lawyer, the first place to look whether or not there's coverage is the terms of the insurance policy. But in a terrorist attack, I think you'd be looking at some sort of a wild card issue, which is the impact of the federal government having their hand in how the insurance industry responds. The other issue that I see with this potential is that it's hard to define terrorism. And if there were to be an attack, the president would surely come right out and say, this was a terrorist attack, because you know it when you see it. But if I'm an insured who doesn't have terrorism insurance, I'm going to be looking at the definition of terrorism pretty closely. And my lawyer and lawyers for all the companies in America that don't have terrorism insurance are going to be scrutinizing that definition of terrorism.
Well, from a reported point of view, the industry's results were reasonably good. There was approximately an 8% return on equity, and in a 2% interest rate environment, that's probably not bad. That said, the reported results of the industry are always a lagging indicator. They're not reflective of what's actually happening in the business. And I would respectfully suggest that the underlying results are not nearly as good as that 8% would indicate.
Commercial lines, we have a negative outlook there. Again, that gets to the direction of ratings. And one of the key things is you do have stronger companies that do maintain a solid reserve base, but a larger number are facing pressure in terms of the reserves there, and we expect to see more and more adverse development on the smaller, mid-sized type companies that might be pressured in terms of their position in the marketplace as well. In reinsurance, obviously the issue there is dealing with the pressure, the rate pressure, and the terms and conditions of all the new entrants through, whether you call it alternative capital, alternative reinsurance sources, but the general pressure that's there. There's also the shrinking reserve margins as well that are driving that.
If you're a reinsurer, you're looking at low yields, historically low yields for a long period of time, downward pressure on pricing because of the alternative market, and the increased competition that the non-traditional players have. As Vijay said, maybe you've exhausted your redundancies, and so that's going to impact you. And then the last thing I would say about this is, as a former regulator, I don't think the regulators fully understand the risks that this market is presenting to the industry, and I think regulators need to be aware of it.
Personal lines market tends to be a little bit more stable in terms of the pricing. You don't see the wide fluctuations that we see in commercial lines and reinsurance, and tends to stay more on pace with loss costs, and obviously the favorable loss costs, the favorable frequency numbers in auto is always a driving force there and has been for many years.
Up until now, giant companies, as Matt was talking about, have always had a tremendous competitive advantage, and there's a lot of assumption that that's, especially in auto, you're going to wind up with a handful of giants, but you have these claims systems and policy management and core infrastructure systems that are sold by third parties that are enabling those little companies to actually have match or superior throughput to giant companies. A lot of people assume that the aggregators online are going to completely benefit the big brands. But I don't see that at all, and you certainly don't see it in the UK, which has really been aggregator central. And so there's a lot of reasons to think that small companies can do well, and these are real disruptors. So I've begun to believe that there isn't a structure for a successful company that'll win. You don't have to be national, you don't have to be mutual, you don't have to be direct. You just can't be stupid. Claims have been falling since the 60s. I think you had a social issue towards safety, and now you have a technological issue towards accident avoidance. Forget autonomous cars till later, just the accident avoidance stuff. Yeah, we're going to see less claims. So auto insurance is going to shrink. That doesn't mean everyone will shrink. In fact, I think we'll see more market share move in personal auto in the next decade than we have in the last 25 years.
We'd like to thank ACORD for their contribution to our program. For more of our coverage of the 2015 Joint Industry Forum, visit the RIN TV On Demand Library.